Sanjiv Bhasin, who's joining in on the show. Sanjiv, good to have you on board. Let's get a sense from you then how you're looking at Maruti, given the fact that now you've got Citi as well endorsing its view on the stock, saying that it's one of the top picks, and we've seen a pretty strong meteoric rise in Maruti of late as well.
Yeah, good morning, Avan. Maruti has been under our coverage since 6.5, 7, 8, and we continue to thought we thought 12,000 was a very big number which we will get to. But now I think, given the consensus and the underweight of most overseas investors, Maruti becomes another catalyst for growth. We are aware that the rural incomes pick up, the aspiration of owning the Alto, the Ertiga, or their new models, and their adaptation into hybrid and EVs. That is playing very well for them. So I think the operating leverage has played out well. Numbers were far in excess of what the market was making. I think it's the best India demographic play which you have. So as a disclosure, we have it in our portfolio and we don't have any intention to sell it in the near term.
Sanjiv, hi, morning. Some words of caution on OMCs actually. You know, CLSA is saying that worries about marketing margins may actually re-emerge. Bernstein is saying that utilities is actually the second most stretched PSU sector or segment in terms of valuations. What is your thought on OMCs?
Yes, Aisha, good morning. I think OMCs or PSUs as a pack, except for say a state bank or couple of banks, you should be lightening your position, particularly metals, gas, and the OMCs. Now it's not that they've been huge outperformers. So obviously profit booking will be part of the case. But for us, the only overweight here is ONGC, which we are very, very constructive on. The rest we would be slightly cautious. We also own IOC and Nalco in our portfolios, which we intend to keep for some time. But like I said, right now the room for comfort is less because of the sharp run-up, and corrections will be part and course of the market. You will see money go into private banks, into engineering, who thought ABB will be on a circuit. I think Larsen is looking extremely good. So money will keep shifting, and OMCs could see some more profit booking over here.
Okay, fair enough. And what's the outlook then in general on PSUs as a whole, given that you've got brokerages of the view that now the index is looking a little bit expensive at an 11.2 times forward PE?
Avan, when the market goes out of sync, then you come out with price earnings and multiples and expensive valuations. 13 lakh crore has become 60 lakh crore in 4 years. Anybody who's owned PSUs is laughing his way to the bank. And I think the sheer underweight of lot of people have missed this, whole party. Yes, now valuations will look stressed because there is under ownership. And as you see, the marquee names now getting into them, there will be this provincial overbought position, which is evident in a lot of stocks. So we are neutral on them. We are not overall negative. You have to pick and choose your winners and also learn to book profits. Leave the rest of the 10-12% which you perceive in, let the other person earn it, but take home some money. Like we said, get into HDFC Bank, get into ICICI, get into Larsen. There are enough other large caps which can give you much more value for money and still keep you invested after booking profit.
Meantime, let's also get in a take then from you, Sanjeev, as to what the outlook is when it comes to those metal stocks. Just yesterday in trade, in fact, the likes of a JSW, a Tata Steel, they were all abuzz. What's the outlook?
Yes, Aman, that is one space which you are very positive. In fact, if you see the Nikkei hit is on the verge of 39,000, which is almost a 40-year high. And it's metals and banks, because we are seeing that the weakness in the dollar is going to get extended. And as a proxy play, metals are in a very sweet spot. In fact, in the last 2 days, we've added Hindalco. This market is uncanny about this Novelis IPO pricing. And that will take care of its capex. But look at the strength of the market over there, both in Canada and in North America. Hindalco is arguably the cheapest metal stock you can get anywhere in the universe. So we have gone overweight on Hindalco at this 505, 510. We have also got overweight on Vedanta. We own Tata Steel and JSW, and we think, and SAIL. And we think this basket is going to hugely outperform in any rally now, taking us to newer highs. Metals has to be a proxy. Hindalco is an ad at these levels. It has fallen sharply for one reason of Novelis overrun on its capex. But I think the new IPO will be at a sharp premium, which actually the proceeds go to Hindalco being the 100% subsidiary of that. I think Hindalco is a cash-rich company generating excellent EBITDA, and I think at this price, this should be in your portfolio along with Vedanta. As a disclosure, Vedanta, Hindalco, 4-5 of these stocks are in our portfolio, and we think they can give you that extra delta in the coming months.
I have to ask you about what do you make of Grasim's entry into the paint segment? Our correspondent is in Panipat. He just joined us a short while back. They're all set to inaugurate their first, paint plant today. But, for an Asian Paints and a Berger, which have the lion's share of the market, and the kind of valuations that both these stocks are at, 50 times plus, what would it mean?
Yes, Aisha, we debated this couple of days back. Look, a brand like Asian or a Berger is there from many, many years. In fact, when we first joined the market 40, 50 years back, it was, I mean, not me, but Asian Paint was still the brand with Gattu being the mascot. And it has made foray into each and every household. It still has 53% of the decorative segment. For Grasim, it becomes a very, very good ancillary because it's a byproduct from their existing business. And I think that there is enough room in this space for even two more players to last. We know JSW has also got into that. Asian Paints has seen profit booking or some selling because of that. But we still remain constructive on this company. This is one company along with MRF which has never diluted equity. And if you thought MRF was expensive at 75,000 6 months back, it is now 1.5 lakh. I think it's a good time to get into Asian Paints and Grasim. We own both those stocks. Grasim for the other businesses and the new Foray, and Asian Paint because the valuation now is very, very seemingly telling us that the middle income rise is also made brand awareness very much part of parcel. And I think Asian Paint will continue to gain more market share or at least stay at those levels. Given that input costs are falling, their margins may actually do well in the coming quarters.
All right.